Assalamualaikum to Dr. Rohaiza. My name is Siti Nohkim Amani binti Abdul Halim. Number matric S71220 from Group 1. And this is our group member. First, Ahmad Sehan Haziq bin Rudiasah. Number matric S70744. Second, Nik Puterin Ali Nadirah binti Muhammad. Number matric S69866. And third, Nurin Sakinah binti Hanizat. Number matric S69919. And four, Fakihah Bakis binti Azmi S71543. Today I would like to present about stage 2 draft functional tool. This is our manufacturing company. Textile Barisan Sendian Berhad. Statement of profit or loss for the year ended 31st December 2024. This is our total income amount 1,850,000 include business income, rental income, royalty and service contract. Less cost of sale amount 697,500 and we get gross profit amount 1,162,500. Then we less total operating expenses amount 733,000 and get amount net profit before tax 429,500. This is our manufacturing company statement of financial position as at 31st December 2024. We can see right here, our company have non-current asset which is land, vehicle, machinery, equipment and building. We total all after less year accumulated depreciation and get 520,000 for all items non-current asset. Meanwhile, for current asset we have bank, account receivable and other current asset. Then total all get 417,500. After that, we total our non-current and current asset get amount 995,000. Net for equity, we have share capital, revaluation reserve, and retained earnings. Get total equity is 690,500 and liability have no current liability is amount 145,500. Current liability is 230,000. So total equity and liability is 995,000, which is same with total asset. So this is our computation of chargeable income for the year ended 2024 for our manufacturing company Textile Warisan Sendia Berhad. So we get a net profit is 429,500 and we add a non-allowable expenses which is provision for obsolete and damaged stock, repair of building, lease passage, EPS employer contribution, bad debt written off non-trade, loan to accelerator written off, and forex exchange loss, loan to accelerator written off, contract payment, donation, interest withholding tax. And then after that we let double deduction which is royalty and rental income. So we net profit we have to add non-allowable expenses and we less double deduction and we get adjusted business income. So balancing charge and balancing allowance we get from our calculate our industrial building allowance and capital allowance for non-current assets. So for adjusted business income, we have to add balancing charge and less balancing allowance and less current year CA, and we get a statutory business income amount 328,000, and then we have to add other income which is rental income, and we get aggregate income amount 578,000, and then we have to less donation, for donation we have to take a lower between donation in notes and 10% of aggregate income. So for this company, we take 10% of aggregate income is lower. So then we less donation and we get a chargeable income amount 521,318, and then this pay out capital income tax at 24% and we get 125,160. Next, this is our technology company Sirata Sendirian Berhad. Statement of profit or loss for the year ended 31st December. This is our total income amount. Amount 1,250,000 include business income, rental income, royalty, and service contract. Less cost of sale amount 55,000, and we get gross profit amount 1,184,000. Then we less total operating expenses amount 407,000 and get amount net profit before tax 778,000. And then this is our technology company statement of financial position as at 31st December 24. We can see right here our company have no current asset, which is land, vehicle, machinery, computer, equipment and furniture. We total all after last year accumulated depreciation and get 525,000 for all items non current asset. Meanwhile, for current asset we have bank, account receivable and other current asset. Then total all get 510,000. After that, we total our no current and current asset get amount 1,035,000. Next, for equity, we have share capital, revaluation reserve and retained earning. Okay, total equity is 878,000 and liability have non-current liability is amount 49,000. Current liability is 108,000. So total equity and liability is 995,000. 1,035,000.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Sirhan Aziz bin Nurdinsa. Today I want to present about investment incentive. Okay, for our company is Sintratech at Sdn Bhd and Textile Warisan Sdn Bhd. Okay, so both of the company have been granted pioneer status. A tax incentive designed to support companies is promoted sectors by exempting a portion of their statutory income from taxation. So Sintratech was awarded a 5-year incentive with a 70% tax exemption effective from 1 January 2023 to 31 December 2028. Meanwhile, Textile Warisan received a full 100% exemption over a similar 5-year period from 1 January 2022 to 31 December 2027. This incentive can significantly reduce a company's tax burden, encouraging investment and expansion. Both companies began production activities around their respective approval periods and were not subject to cancellation. In terms of operation expenditures, Sintratech Sdn Bhd recorded a total of RM 217,000 in allowable business deductions, mainly comprising staff remuneration, repairs and maintenance, insurance and other administrative expenses. However, Sintratech did not claim any double deductions, possibly due to the nature of their expenses not qualifying under approved incentive programs such as training, R&D or export promotion schemes. This means Sintratech only benefits from its 70% tax exemptions on statutory income without further leveraging additional tax-saving avenues that could have increased their overall deductions. On the other hand, Textiles Warisan Sdn Bhd demonstrated more strategic tax planning along with normal operating expenses like repairs, staff salaries and advertising. They claimed double deductions for approved training and research expenses as well as insurance, each amounting to 30,000 ringgit. This resulted in a higher total deductions figure of RM 798,000, showing effective utilizations of available tax incentives. The comparisons reveals a clear distinctions. While both companies enjoy significant benefits under pioneer status, Textile Warisan maximize its relief through proactive efforts to qualify for additional deductions. This underscores the importance of not only receiving tax incentives but also planning and managing expenses to fully capitalize on them.
Assalamualaikum warahmatullahi wabarakatuh. My name is Fakihah Bakir binti Azmin at 71543. Today I will be presenting about the Industrial Building Allowance IBA and Capital Allowance CA, which are essential tax incentive for businesses in Malaysia. Industrial Building Allowance IBA is granted on qualifying industrial buildings used for business purposes. In our case, both Textile Warisan Sdn Bhd and Sintratech Sdn Bhd own buildings that qualify for IBA. The qualifying building expenditure QBE for Textile Warisan is 250,000, while Sintratech QBE is 300,000. Okay, now let me show you how I calculate the IBA for Textile Warisan Sdn Bhd. As I told you before, the QBE is 250,000. The initial allowance IA is 50,000, while the annual allowance is 7,500. How did I get the initial allowance IA and annual allowance? First of all, we must know the percentage to calculate the IA and AA for year assessment 2020. The percentage for IA is 20%, while for AA is 3%. After that, we must multiply the percentage with the QBE above. which is 20% multiply 2,500 and 3% multiply 2,500. And we will get 50,000 for IA and 7,500 for AA. After that, we must calculate the retained earning for year assessment 2020. To get the retained earning, we must deduct the QBE, IA and AA together. That's how we will get the retained earning, which is 192 and 500. Same goes to the next year, but the initial allowance is only exists for the first year. We want to calculate the QBE. As for that, for year assessment 2021, there is only annual allowance for the year assessment. And the annual allowance will always be the same with the first year annual allowance, because we must always multiply the percentage with the QBE. That's why the AA for every year is always the same. So to get retained earning for year assessment 2024, we must calculate the retained earning for year assessment 2021, 2022, 2023 to get the retained earning for year assessment 2024. So after all the calculation I have done, I get 162 and 500 for retained earning for year assessment 2024. That's how we will calculate the industrial buildings allowance. The next one is capital allowance CA. Capital allowance applies to assets such as machinery, vehicles and equipment. It is given in stages through initial allowance and annual allowance. Textile Warisan has qualifying plant expenditure QPE for equipment, machinery and vehicles totaling 500,000, while Sintra Tax QPE includes furniture, computers, machinery and vehicles totaling 700,000. Now, let me tell you how I calculate the capital allowance for equipment. The first one is the QPE for equipment. We must know the QPE for equipment. So the QPE is 150,000. For year assessment 2021, we must calculate the IA and AA. As I told you before, the IA is only exists when we first calculate the CA, capital allowance, for the assets. The initial allowance percentage for equipment is 20%, while the percentage for annual allowance is also 20%. So, to get this amount of IA and AA, we must multiply the percentage with the QPE given. So, we will get 30,000 for both IA and AA. For year assessment 2022, the annual allowance is still the same, which is 30,000. Lastly, we will get the retained earning for year assessment 2023, which is 30,000. After we deduct the QPE with IA for year assessment 2020, 2021, 2022 and 2023, we will get retained earning for year assessment 2023, which is 0. Meanwhile, for machinery, the QPE is 250,000. For year assessment 2021, we must know the initial allowance and annual allowance. The percentage for an initial allowance for machinery is 20%, while for AA is 14%. We must multiply the percentage with QPE for machinery. Then we will get 50,000 for IA and 35,000 for AA in year assessment 2021. For machinery, we have disposed the asset. So the retained earning for year assessment 2023 is 95,000. The disposal amount is 100, and we will get the balancing charge 5,000 for machinery. In summary, industrial building allowance and capital allowance are crucial for managing taxable income and reducing tax liabilities for company. They ensure businesses can reinvest in operations while benefiting from tax relief. That's all for IBA and CA. Next, we will go step by step through the accurate calculation of withholding tax using real financial data from Textile Warisan Sendirian Berhad and Sintra Tax Sendirian Berhad. First of all, withholding tax is a tax deducted at source before payments are transferred to non-resident companies or individuals. This ensures that Malaysia collects tax on international transactions before funds leave the country. The key payment subject to withholding tax is interest payment to foreign financial institutions, royalties paid to non-resident companies, and contract payment to overseas service provider. According to Malaysian tax law, the standard withholding tax rates are 15% for interest payment, 10% for royalties, 13% for contract payment, and 10% for special classes of income. Now, let's apply these rates to real transactions. Based on Textile Warisan's financial record, the following transaction required withholding tax deduction. The first one is interest. The gross income for interest is 100,000, while the withholding tax rate applied is 15%. After multiply the gross income with the withholding tax rate applied, we will get 15,000 for withholding tax amount for interest. The date of transfer is 18 April 2024 and the date of payment to IRB is 15 July 2024. The second one is contract payment. The gross income for contract payment is 10,000, while the withholding tax rate applied is 13%. So we will get 2,340 for withholding tax amount of contract payment. The date of transfer is 25 May 2024 and the date of payment to IRB is 26 May 2024. There is a penalty for late payment for interest of Testa Warisan Sendirian Berhad. To get the total amount, we must multiply 10% penalty with withholding tax that should be paid earlier and multiply it again by 2 months because it had been late for 2 months. So the total amount that we will get of paid to IRB is 18,000. For Sintra Tax Sendirian Berhad, 2 major transactions attract withholding tax. The first one is software royalties. The gross income is 25,000, while the withholding tax rate is 10%. After multiplying the gross income with withholding tax rate, we will get 2,500 for withholding tax amount. The date of transfer is 20 March 2024 and the date of payment to IRB is 31st March 2024. The second one is interest. The gross income is 100,000, will be multiplied by 15% and we will get 15,000 for withholding tax amount. The date of transfer is 12 August 2024 and the date of payment to IRB is 13 September 2024. There is a penalty for late payment of interest. The penalty 10% should be multiplied with the withholding tax that should be paid, which is 15,000. After that, we will get 1,500 for the penalty, and the total amount of paid to IRB will be 16,500 after we add the withholding should have been paid and the total penalty that we calculate earlier. In conclusion, withholding tax compliance is essential for business operating in Malaysia. By applying the correct tax rate and ensuring timely payments, companies like Testa Warisan Sendirian Berhad and Sintra Tax Sendirian Berhad can avoid penalties while maintaining financial efficiency. That's all from us. Thank you.